If you want to see the market forecast first, go to slide 6, the market forecast for swings. Howdy swings. As we predicted in yesterday's video, the market has been bouncing back and forth between 5550 support and 5650 resistance. Nvidia failed to meet the market's too high expectations, and the market fell 1% on the SPX before recovering to close higher on Friday. Friday's recovery was stronger and faster than expected. How will the market respond before and after the release of the Friday's jobs report? Let's take a look at Fullhapce's weekly swing market forecast to get some answers. Let's review daily market index movements. Market indexes were mixed, moving slightly sideways. The VIX fell by more than 5%. SPX, 5,648.4, 0.24% up. Dow Jones, 41,563.08, 0.94% up. NASDAQ, 17,713.62, minus 0.92% down. Russell 2000, 2,220.6, minus 0.30% down. VIX Index, 15.00, minus 5.42% down. Let's look into weekly sector performance. Financials, aerospace and defense, industrials, pharmaceuticals, utilities, healthcare, and transportation were strong. Technology, home builders, long-term bonds were strong, and retail was weak. Let's take a look at some of the reasons why. Nvidia fell despite good performance, suggesting that the market has too high expectations for AI. Dollar General, DG, released a very weak earnings report, suggesting economic hardship for low-income households. Japan's Consumer Price Index, CPI, came in higher than expected, suggesting continued fiscal pressures in the country. U.S. equities continued to remain expensive, suggesting that they are overvalued. In his Jackson Hole speech, Chairman Powell's positive comments, suggesting monetary easing with a focus on employment, had a positive impact throughout the week. The European Central Bank, ECB, is expected to cut interest rates in September, supported by recent inflation data from the Eurozone. Here are the things to consider. The U.S. economy's growth for the second quarter was revised upwards. Core personal consumption expenditures, PCE, for the second quarter in July were revised downwards. Personal spending increased. Consumer confidence improved, according to the Conference Board. Weekly jobless claims remained steady. The Atlanta Fed reported a significant decrease in wage growth for July. Inflation in Europe decreased significantly in August, which might lead to a rate cut by the European Central Bank, ECB, in September. The People's Bank of China, PBOC, is considering new policies that could do more to help. Tensions in the Middle East have eased somewhat, with minimal clashes and steps being taken to ensure peace and security in the region. OPEC Plus decision. OPEC Plus plans to increase oil production in October, which could help stabilize oil prices. Ukraine's President Zelensky has called for an end to the war. Here we present the weekly market forecast for swings. The monthly market is getting weaker, the major market crash is slowly approaching, and volatility is increasing. On the other hand, the weekly bullish potential is still strong, but trend uncertainty is increasing. As a result, the weekly market could see big gains or losses. Investors want to go higher, but seem to be hesitant until the jobs report. This week, as we expected, the SPX recovered and closed higher after a 1% decline, but the pitfall remains that the financial sector did not get a mini correction of 1% or more during the market decline. Therefore, we could see a 1% plus mini correction in the financial sector early next week. If that happens, it is possible that the market will move in the same direction as the financial sector. In this case, with the market's weekly trend uncertainty, the market could fall around 1% on the SPX and then recover to rise above the SPX 5650 level, which could be a volatile move. The following week, starting on September 3rd, could see the market fall about 1% SPX, with a correction of 1% or more in financials, before recovering to close higher. After September 9th, a rally is likely. Let's explore some additional insights. There are still Goldilocks data, monetary easing expectations, and earnings announcements that have been driving the stock price up recently. So if the stock price does fall, it will likely be small and short-lived. However, with the stock price already at such a high level right now, the chances of a big move higher are somewhat limited. The biggest concern is that economic growth could slow, but so far, so good. Let's look at the counterarguments. The rationale for this scenario is as follows. Japan's Consumer Price Index, CPI, came in higher than expected in August, suggesting that the Bank of Japan may tighten policy. The deflationary process in the U.S. stalled in July, with the Personal Consumption Expenditure, PC, index remaining stable year-on-year compared to June. Many U.S. retailers pointed to sales pressure from weaker consumer demand. Dollar General reported particularly weak results, indicating the severe challenges facing its core low-income customers. Geopolitical tensions have eased somewhat, but not by much. Tensions between the U.S. and China in the South China Sea are likely to escalate. Oil prices have been under upward pressure due to Libya's declining oil production. In the past, drawing a double pick at the SPX top on the daily chart has often resulted in a pullback, in some cases even lower than the previous bottom. A correction of about 1% in the financial sector is imminent, and we don't know how big it will be for the market. I think the opposite scenario is also possible if concerns about employment overlap. In this case, it could be an opportunity for bullish traders to wait for a bottom and buy at lower prices. The conclusion is as follows. We believe that the monthly market is slowly becoming more volatile, and the weekly market is still in an uptrend. However, while the weekly market is strong, trend uncertainty is starting to increase. As a result, the financial sector has yet to see a correction during this week's market decline. We believe that next week, which begins on September 3rd, the market may decline initially with the financial sector down 1%. But even so, the weekly market is likely to close higher. There is also a possibility that a modest rally could resume after September 11th. In that case, traders may want to consider an approach of buying a little more at support and selling some of it at resistance. Also, traders may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.